Welcome back to Alpha Recap. I'm glad you could join us. Today we're unpacking a pretty eventful close. Markets closed down after a geopolitical shock near the Strait of Hormuz, but there were some sharp sector differences underneath that headline. As always, if you have questions, you can reach us at stockalpha.ai.
Thanks for having me. Lots to dig into from today. Geopolitics, energy spillovers, some biotech upside, and a set of filings that quietly moved a few timelines.
Let's start with the big picture. Walk me through the risk-off move and why the Strait of Hormuz item mattered so much for today's tape.
Sure. Quick version. Iranian forces turned back ships at the Strait of Hormuz, which is one of those choke points for global seaborne oil flows. That pushed oil prices higher and set a risk-off tone for the session. The combination of higher energy risk and technical stress in some large tech names translated into downward pressure on indexes heading into the close.
Right. So the headlines raised the odds of a supply hiccup, and that trickled through to markets.
Exactly. When you step back and look at this, higher oil feeds into inflation expectations, which changes discount rates and squeezes growth names. That dynamic was part of why the market closed lower today.
We also saw some real divergence beneath the surface. Tell us about the notable winners and losers.
One clear winner was AstraZeneca. They announced a surprise positive trial result in chronic obstructive pulmonary disease, and the stock jumped roughly 4% intraday. Meanwhile, names tied to consumer or alternative asset exposures, like Cadre and O'Reilly, continued to show longer weakness. Cadre is down about 15% over the past 6 months, and O'Reilly is down about 14% in the same span.
Wait, really? AstraZeneca up about 4%. That's a big single-day move for a large pharma name.
Yeah, that tracks. Clinical surprises in big pharma can re-rate parts of a pipeline or change M&A and royalty math, so the market tends to reward that kind of positive news, even in an otherwise risk-off day.
And on the downside, tech and cyclicals felt the squeeze from the oil move and technical pressure. Not a great day for chip and large-cap momentum names.
Right, the headline drove the initial move, but the tape amplified where there was technical vulnerability. So stocks that had been extended or were already underperforming took bigger hits.
You mentioned analyst behavior earlier. There was some note about a high-profile firm keeping a rating steady on a major retailer. How important was that for today's narrative?
Oppenheimer kept their rating on Nike unchanged ahead of the quarterly report. Analysts often do that to avoid creating new expectations right before big catalysts. Analysts note that maintaining a rating can mute volatility in the lead-up to earnings. It signals continuity rather than a fresh conviction.
So it's more of a wait-and-see posture than a directional call. Makes sense.
Yeah, absolutely. For some investors, that's comfort. For others, it's frustrating. No new guidance, no new signal.
Let's shift to something procedural but important. Those Form 8K filings that showed up today. Explain why investors should pay attention to them.
8K filings are basically the corporate equivalent of breaking news about governance, material agreements, or fiscal year changes. Several companies filed 8Ks today. National Cinemedia, BioXcel Therapeutics, Two Harbors, Reliance Global Group, PMGC Holdings. And while these moves are often procedural, they can change reporting cadences, disclosure windows, or contractual liabilities. For event-driven investors, that calendar shift matters.
Short reaction? Got it. Those filings can be quiet but important. Right.
Exactly. For small companies, those details can be the difference between timely disclosure and a messy surprise later on.
Let's dig into the areas where expert takes diverged today. There seem to be two competing narratives around pullbacks: opportunity versus caution.
Correct. For example, a Yahoo Finance feature framed O'Reilly as a potential buying idea after its pullback. But other analysts looking at Cadre argued the weakness was a signal to reassess exposure to alternative assets. Both narratives used the same price action, roughly 14 to 15% declines over 6 months, but one emphasized opportunity, the other emphasized operational risk and execution concerns.
Which I guess comes down to time horizon and what you care about. Valuation reset versus cash flow fundamentals. Short reaction? Makes sense.
Right. And that feeds into how traders and allocators position themselves. Short-term traders might try to play the bounce. Long-term allocators could view this as a red flag to check fundamentals.
Take me through the deeper context on a couple of the big moves. First, why the Strait of Hormuz disruption matters beyond the headline.
The strait funnels a meaningful share of global seaborne oil. Any action that increases the risk of transit disruption tends to raise oil, which feeds into inflation expectations and can bump nominal yields. That hurts growth-sensitive sectors through two channels: higher discount rates and potential margin pressure as energy and transport costs increase. So it wasn't just the headline, it connected directly to valuation math.
And AstraZeneca, a big pharma clinical win. How do we think about that in a broader market where macro was negative?
Clinical wins for big cap pharma are interesting because they can reprice a whole part of the pipeline. AstraZeneca's trial reduced flare-ups in COPD patients, and that immediate market reaction, again roughly 4%, reflects both the surprise element and the commercial implications for the respiratory franchise. In plain terms, even when the macro backdrop is bad, company-specific catalysts can still drive outsized moves.
So idiosyncratic upside can still shine through. Short reaction? Interesting.
Yep, but a caveat: smaller biotechs that file 8Ks can be in very different positions. Some are clarifying steps before a positive re-rating, others are signs of financing stress. The market treats those very differently based on balance sheet and visible catalysts.
Let's pivot quickly to implications for different investor types. What did today mean for traders, income investors, growth, and allocators?
For short-term traders and systematic funds, today produced clear dispersion: defensive healthcare and some biotech winners versus tech and cyclical pressure. That creates pair trade opportunities, but also raises overnight gap risk from geopolitical headlines. Income and alternatives investors. Cadre's slide highlights the need to monitor cash flows and distribution coverage instead of reflexive allocation increases. Growth investors should watch Nike's upcoming quarter, given that analyst continuity. It will be a test for demand resilience. And long-term allocators need to note the governance and calendar changes from 8Ks, because timing shifts can affect rebalancing and event-driven plays.
Good checklist. Now, tactical. What should listeners keep on their radar in the coming days?
First, oil prices and shipping traffic around the Strait of Hormuz. Any escalation keeps energy and inflationary repricing active. Second, Nike's earnings and guidance window for consumer demand color. Third, AstraZeneca's follow-up disclosures and regulatory timelines to see if the move is sustained. And finally, read the recent 8Ks for the specifics on material agreements and fiscal year changes for companies like National Cinemedia, BioXcel, Two Harbors, and the others. The filings contain the terms that can change near-term expectations.
So, monitor macro, watch catalysts, and read the filings. Concise and actionable.
Exactly. Analysts note that headline-driven volatility is a prompt to reassess exposures and confirm fundamental narratives. Don't assume everything moves in lockstep.
Before we wrap, give us the bottom line. 3 clear takeaways listeners can remember from today.
1. Geopolitical risk around the Strait of Hormuz pushed oil higher and set a risk-off tone, which amplified technical weakness in growth names. 2. Sector divergence was pronounced. AstraZeneca's clinical win produced discrete upside, while some consumer and alternative asset names continue to show multi-month underperformance. 3. Pay attention to calendar and governance items. 8K filings and analysts' pre-earnings continuity both shape timing and expectations more than headlines alone.
Great. Quick reactions. Honest, clear, useful. Thanks, Josh.
Thanks. Honestly, I was a bit surprised by how clearly the sector split showed up amid the broader risk-off move. It was a good reminder that markets are never uniform.
Big move. All right, that's a wrap for today's Alpha Recap. If you have questions about anything we covered today, head to stockalpha.ai, where you can ask us directly and we'll answer live. For more market analysis and insights, visit stockalpha.ai. See you next episode.